Hi, Brad Vincent with Realty Associates here to talk to you today about owner financing for prospective buyers. Basically, this video is to give you a little bit of information about owner financing to kind of help you decide whether or not it might be the right process for you. I want to cover the basics of owner financing, how the process works, the pros and the cons, just kind of the step-by-step process, and just some bumps in the road to look out for and some good practice. I get my experience from working mostly with investors who sell homes using owner financing. Through that process, I have done a lot of owner financing in the past few years. I designed a program specifically to help sellers offer owner financing and buyers find houses with owner financing. And through that program, I've been able to get a lot of people into homes that really wouldn't be in homes, and I've helped sellers sell homes that probably wouldn't have sold as fast as they did. So I'm a big proponent of owner financing. There's a lot of ways to really make it work for both sides. So in this instance, I want to talk about me representing the buyer and helping you get a loan through an owner. So I'm going to start by talking about how the process works. If you've bought a house before, this process is going to be pretty simple to you because it's very similar to buying a house with a regular loan. If you were to buy a house with a regular loan today, you go to Wells Fargo, Bank of America, someone like that. You put in an application, you get approved, you go buy your house, and then you go to closing. At closing, your name would be put on the deed of the house, and Wells Fargo would be listed as the lien holder. You would write a mortgage between you and Wells Fargo, and you'd start paying them. You own the house. The only way you'll lose the house is if you stop paying on it. It's the same thing with owner financing, except for the owner is going to be the one who gives you that loan. You're going to go to closing, the deed goes in your name, you own the home. The only difference is the owner is now the bank. It's taking the spot of, say, Wells Fargo. So it's very similar. You go to closing, everything's the same. It's much better than a lease purchase, which I won't even do, because a lease purchase, you don't own the home. You're writing a contract to lease the home and then eventually purchase it. So many times I see people lease the home they don't end up purchasing because of loopholes in the contract or because they can't qualify down the line. So really not a fan of the lease purchase because it does not give you ownership. So I want to talk about the pros and the cons. I'll start out with the cons of doing this. One of the big cons of owner financing is you're going to get a higher interest rate than on a normal loan. Right now your average loan, or average interest rate on your average loan with a conventional loan is about 6.25%. The average interest rate I see on a loan with owner financing right now is about 7.5% to 8%. And this is going to be someone who is, your average buyer who needs owner financing, who cannot get a conventional loan due to credit, maybe job history, something like that. This is the average buyer gets about 7.5% to 8%. Some people are worse off than others with their credit scores and with their income and things like that, but the average guy's getting 7.5% to 8%. 7.5% to 8% really is not a high number, especially if you compare it to the last 20 years or so of the mortgage industry. It is high compared to today's standards, being about 1.5 to 2 points higher. So it is a definite con that you're going to get a higher interest rate. Another con is that you're going to pay a little bit higher price for the house. There's a lot less houses out there with owner financing. The owner knows you have less availability, so he's not going to budge on the price quite as much and negotiate on the sales price. The key thing to remember when buying a home with owner financing is to negotiate on the terms of the loan rather than the sales price, because knocking down the interest rate of percent is going to save you a lot more money than knocking $10,000 off the price of the house. That's something you need to remember. So your interest rate is going to vary depending on your down payment. The down payment is really the key to an owner finance loan. The more you can put down, the better. The owner of the home is going to incur about an 8% loss in closing costs, so they're going to be looking for you to at least put down that 8% to 10%, one, to cover the closing costs, and two, to prove that you can save the money. If he's looking at your credit's a little shaky, but you have this big down payment that you've been able to save, then it shows him, hey, this guy's serious, he's been able to save this money, and he's going to be able to pay this loan. Makes him more comfortable. So the more money you put down, the better. Minimum starting points can be about 8 to 10%. I've seen 0% put down, 5% put down, but you're going to pay a lot higher interest rate on one of those loans. I've seen 10 and 11% on those loans. So you want to bring a good down payment to the table to save yourself the hassle of high interest rates, and also just to make that owner more comfortable. Another con is going to be the term of the loan is going to be a lot shorter. You're going to be looking between 3 and 5 years rather than 15 to 30 year loan. What this does is it allows you 3 to 5 years to get your credit in order and get a conventional loan, and then refinance out and get your conventional loan as quickly as possible. So you need to plan ahead. You need to know how long it's going to take you to refinance so that you can do it in that allotted time. Some owners are going to offer 15, 30-year loans. If you see that, jump on it. There's a lot of benefits to it. I don't have time to discuss them, but there's just huge, huge benefit. Really, those are the only cons. Availability also being a con, but I kind of already mentioned it. So we'll move on to the pros. One big, big pro of owner financing, and really the big pro, is you get to own a home. You wouldn't be buying a house otherwise. No one's going to give you a loan right now. I mean, credit is so tight that the only other option you have is owner financing. So that's the big pro. Another one is you're going to get the opportunity to have that $8,000 tax credit that they're giving out to first-time home buyers, and also to people who have not bought a home in the last 3 years. So that's just huge. Another big, big pro that I think people overlook is you have less closing costs with an owner finance loan. You don't have to pay any of those loan origination fees or anything like that. You're just paying your taxes, your insurance, and depending on how you structure it, it's also kind of a custom thing you can do to work with the owner. You can structure how you want to pay your taxes and your insurance and everything. There's very little coming out of pocket at closing. When you pay those loan origination fees with, say, Wells Fargo, Bank of America, you're looking at 3 to 5% out of your pocket. So you're looking at saving a lot of money at closing. So that's something to think about. A lot less out of pocket as far as closing costs go. That's definitely a big plus. It's all about just trying to find a way to buy a house. If you're prepared to buy a house and you really want to buy and you want to make that investment and really put your money to work rather than spending money on, wasting money on a lease, this is really a good option. I've seen a lot of really happy people do this. All of my clients have currently, as far as I know currently, have been able to refinance in the time that their term was up on their mortgage. So I see a lot of positive things going on with it. I'd love to help you get this process started. You can go to my website, www.bradvincentrealtor.com, for more information. All my contact information is there. Feel free to shoot me an email, give me a phone call, ask any questions you have. Any information I give you is free. I'm here to help. If I can't help you, I won't waste your time and I won't waste mine. I'd love to help you get started and to see if this might be a good process for you, and I'd love to help you try to achieve that American dream. Thanks for giving me your time and letting me give you this information, and I hope to hear from you. Have a good day.